We mentioned some of Cathie Wood's calls. This is a story-driven market right now. What stories do you think are driving most of the trading action? Is it very macro, like in Beijing crackdowns, or is it very micro, like it is with bank earnings?
Well, right now, the story is really the COVID relapse potentially, which we don't buy at all, and concerns about Fed policy. We're on the opposite side of Cathie on a number of these issues. I think oil's heading significantly higher. We have a $90 target this year. It's been underinvested in for a very long time. Supply is not there. Demand is surging. We've got inflation continuing pretty high here over the next several months. We think we're looking at nominal GDP this year of around 10% and something like maybe 6 to 8 next year. So, this is an environment where earnings are really soaring, particularly on the cyclical sides of the economy and in financials. And, those are the cheapest stocks in the market right now. So we're continuing to lean into that trade. It's going to be choppy as the Fed, starts to get with the program. But gosh, they're just so dovish here. It just seems like it's a real setup for a kind of Goldilocks cubed scenario back, through the rest of the year here.
So, Greg, it's interesting. All of those points that Steve just brought up have led to one word that I've heard a lot more than any others over the course of the last several months, and that is reflation. We hear about it all the time. We talk about consumer prices. We talk about it in the stock market overall. So do you believe that Steve is correct here? Do we continue to see legs for that reflationary trade, those economically sensitive sectors that will continue to maybe break through?
I would agree with that, Don, and thanks for having me back. I would say to you, we're probably going to see some really strong second quarter earnings numbers, potentially up 40, 50% versus 2020. That being said, I think investors need to bear in mind some headwinds that the markets are facing. And these would go beyond the inflation issues. Look at where oil is, up 30% for the year. Look at labor costs. Every CEO on your program is talking about not only having challenges finding labor, but paying for it, but tax reform. Your Frank Collins just mentioned a few minutes ago, this $3.5 trillion spending plan. How's that being paid for? We do believe inflation is going to be a concern as we head to the end of the year. Tax reform is going to be a concern. And then, of course, the Fed. The CPI number we saw yesterday was hotter than expected. And we do think the Fed's going to signal at Jackson Hole tapering, if not when they begin to raise rates. These could all put some headwinds in markets closer to the end of the year.
So, Steve, I mean, you mentioned some of the earnings kind of tailwinds that we have right now. There have been a number of investors and traders who believe that there are comparability issues in the coming months. Meaning it was easy to kind of go above and beyond the pandemic economy that we had last year, this time around. But going forward, those comps become more difficult and more difficult. What needs to happen for this market to keep going higher?
I'd say take a walk down Main Street. This economy is gaining momentum. People have been locked down for a year and a half. There are piles of cash everywhere. The Fed is still spraying gasoline on the forest fire, not water. Things are really soaring. So I think you're going to see top line growth here continuing to be quite strong in the back half of this year as it feeds on itself. And I agree with Greg that, when the Fed starts to talk a little bit about taper, the markets will probably initially take a bit of a setback, but we're actually rooting for them here. I think the risks here on a longer term basis are they take too long to get going. This economy can sustain 2.5% 10-year rates easily. And if they take too long to get going, this inflationary cycle could really take off. But for the near term, I think we've got a pretty bullish setup.
All right, so Greg, let's put some trades around this. You've got to make some investment decisions specifically with certain stocks, certain industry groups, certain sectors. What exactly then would you go towards? Is it still going to be the value trade, or is it going to be different in terms of maybe big cap technology, the safety trade, so to speak, over the last several years?
Sure. Yeah, so I think a few things investors need to be thinking about right now, Dom. The first would be, from a planning perspective, accelerating some of their charitable giving, funding a donor-advised fund when markets are hot like this. Take that deduction. You have the rest of your life to give that money away. But in terms of sectors we like, we like disruptive healthcare right now. We think about not large cap pharma per se, but think about cell therapy, gene therapy. We've got a tremendous amount of cancer research being done, and that's being M&A driven right now. There's a lot of dry powder in the arms of private equity that we think is going to continue to be deployed. So we're very much in favor of med tech, gene therapy, and we're playing that through the investing in the Eventide Healthcare and Life Sciences Fund to participate in that space.
Shepard Smith here. Thanks for watching CNBC on YouTube.